The truth about real estate crowdfunding. Everyone wants to invest in real estate. But let's be honest, buying a property is expensive. Down payments, loans, taxes, maintenance, that adds up fast. For most people, owning real estate has always felt out of reach. But what if there was a way to invest in real estate without owning the property yourself? Welcome to the world of real estate crowdfunding, one of the most talked about investment trends of the decade. So what exactly is real estate crowdfunding? In simple terms, it is a way for multiple investors to pool their money together to fund real estate projects. It could be anything, an apartment complex, a shopping center, a hotel, or even a new housing development. Instead of one person buying the property, hundreds or even thousands of investors each contribute a small amount. And in return, they share the profits from rent or property appreciation. It's like owning a piece of the pie without having to buy the whole bakery. You can invest as little as $100 or $500 and still get exposure to the real estate market. That's what makes it so attractive, especially for new investors who wanted to build wealth but can't afford to buy a full property. Now, here's where things get interesting. Real estate crowdfunding became popular because it broke the barriers of traditional investing. For decades, only wealthy investors or institutions could get access to high-value real estate deals. But now, with crowdfunding platforms like Fundrise, Realty Mogul, CrowdStreet, and others, anyone can invest with just a few clicks. Technology has made real estate more accessible, democratizing what was once reserved for the rich. But before you get too excited, let's talk about the truth, both the opportunities and the risks. The biggest advantage of real estate crowdfunding is diversification. You don't have to put all your money into one property. You can invest small amounts across multiple projects, residential, commercial, or industrial, in different cities or even countries. This spreads your risk. If one project underperforms, the others can balance it out. Second, it is passive income made easy. You don't have to manage tenants, deal with repairs, or worry about property taxes. You invest, and the platform handles everything: property acquisition, management, rent collection, and profit distribution. You just sit back and earn returns while someone else does the work. Third, the potential returns can be quite attractive. Many crowdfunding platforms claim annual returns between 8% and 15%, depending on the project type and risk level. That's often higher than what you would get from a savings account, or even some stock investments. Plus, real estate can act as a hedge against inflation because as prices rise, property values and rents tend to go up too. However, real estate crowdfunding isn't risk-free. In fact, it comes with some hidden dangers most new investors overlook. The first major risk is liquidity. Unlike stocks, you can't just sell your investment anytime you want. When you invest in a crowdfunding project, your money could be locked in for years, sometimes 3, 5, or even 10 years. If you suddenly need cash, it is not easy to withdraw it. That's why it's important to invest only the money you can afford to keep aside long term. The second issue is transparency. Not every platform gives you a full picture of the project's risks, fees, or performance history. Some might show projected returns, but those are just estimates, not guarantees. The property market can fluctuate, and if a project underperforms, your returns can shrink, or worse, you could lose money. The third challenge is platform reliability. Crowdfunding platforms themselves are still relatively new. If the company managing your investment goes bankrupt or shuts down, your money could be at risk. That's why you should always research the platform before investing. Check their track record, management team, and reviews. And then there is market risk. Just like any other investment, real estate values can drop. Economic slowdowns, rising interest rates, or oversupply in certain markets can all hurt property returns. In 1925, for instance, higher borrowing costs and global economic uncertainty have slowed down parts of the real estate market. So even crowdfunding projects are feeling the pressure. But don't let that scare you. If you understand the risks and choose wisely, real estate crowdfunding can be a powerful tool in your portfolio. It's not about getting rich quick. It's about growing your wealth strategically over time. Here's what smart investors do before jumping in. They research multiple platforms, not just one. They read the project details carefully, the location, developer, timeline, and risk rating. They diversify across different property types. And most importantly, they stay patient. Because real estate is not a short-term game, it's about compounding wealth through time. The longer you stay invested, the more you can benefit from rental income, property appreciation, and reinvested profits. Another pro tip: always understand the fee structure. Crowdfunding platforms often charge management or performance fees, which can reduce your net returns. So if a project promises 12% annual return but takes 2% in fees, you're really earning 10%. It's not bad, but you should know exactly where your money is going. Now let's talk about who this investment is ideal for. If you're a beginner looking to dip your toes into real estate, crowdfunding is a great start. It gives you exposure to real assets without huge upfront costs. If you're a busy professional who wants passive income but does not want to deal with tenants, it is perfect. And if you are already an investor wanting to diversify beyond stocks or crypto, this can balance your portfolio nicely. However, if you are looking for quick returns or if you need liquidity, it might not be for you. Real estate crowdfunding works best for long-term, patient investors who understand that wealth grows slowly but steadily. At the end of the day, the truth about real estate crowdfunding is simple. It's not a get-rich-quick scheme. It's a new age investment vehicle that combines technology with one of the oldest wealth-building assets in history: property. It makes real estate accessible, affordable, and convenient for the everyday investor. But like any investment, it demands research, patience, and discipline. So before you invest, do your homework. Don't just follow hype, follow facts. Choose trusted platforms, read the fine print, and never invest money you can't afford to lock away. Because when done right, real estate crowdfunding can turn small investments into powerful streams of passive income over time. If you found this video helpful, make sure to like, subscribe, and share it with someone who is curious about real estate investing. And tell me in the comments, would you try real estate crowdfunding in 2025? Your journey to smarter investing starts today, one informed decision at a time.